In today's video, I'm going to reveal to you my 15-minute scalping strategy that's allowed me to become profitable and pull daily, consistent numbers from the market like this and this. This is a completely back-tested model that's worked for a number of years for me and for hundreds of other traders in my community right now. And if you're wondering if it's going to work for you, I'm going to show you the complete backtest data later on in this video with the win rate and everything else to prove to you that this is a genuine working model that you can actually start using today. I'll also show you some live examples on the charts so you can see how to actually execute this for yourself. So today you're going to be learning about the 15-minute candle trading strategy. I'll show you how to identify the setup, and I'm going to show you the exact 3 steps that you need to take in order to actually execute these trades. And then, as I said, we'll be walking through some real examples so you can see how to actually do this for yourself as well. Now, all the focus on this strategy is based on just one candle, and that is the 15-minute candle that we're going to be focusing on in a market session open. I'm going to be explaining what that means as we go. The coolest thing about this is that you don't need any bias when you're coming into the day. It is a done for you candle that basically gives you the levels that you need to work with. Okay, so normally traders will have to come into the session, they'll have to work out a range, work out the high and the low. All of that stuff's going to be worked out for you and done for you just based on this 15-minute candle. Now, this model is completely universal, but my students and we specifically like to trade a NASDAQ and S&P, sorry about that. But you can also apply this to gold, silver, copper, Forex, and crypto as well. I know a lot of people in my community are trading this model on gold and silver and copper, and they're absolutely nailing it. But for me, I personally prefer to use NASDAQ, and that's what we're going to be using our examples on today as well. So you can use this session for Asia, London, or New York. The only thing that you have to remember is that we're going to be using the opening time of the session. That means when New York opens, for example, it's at 9:30 a.m. Eastern time. At Asia time, that's going to be, I believe, 6 o'clock Eastern time. And then London, I think it's around about 3 o'clock Eastern time in the morning, okay? I'm in the UK, so the times are different for me, but you need to work out what time that is for you. So the first thing that you're going to do is you're going to find the first 15-minute candle of your session, okay? So as I said, London is at 3, New York is at 9:30, and Asia is at 6 EST, okay? So all you're going to do is you're going to go to the 15-minute time frame. You're going to look for that first 15-minute candle. So in this example, we've got the New York session, right? So you can see here, you got 9:30, which means it's the New York session. And you're just going to look for that 15-minute candle on the 15-minute time frame at that exact specific time. Once you've then got the candle, what you're going to do is you're going to mark out your high, just like this here, and you're going to mark out the low, just like this here, of the 15-minute candle. That's going to do a couple of things for you. It's going to give you the actual range that you're going to be trading within, but also it's going to help you to determine the bias for the day, okay? So how do we do that? Well, simply put, all we're looking for here is a breakout of that particular range. So in this example here, you can see that price right there is trading to the upside, this green little line just there. And when that breakout happens to the upside, it gives the trader an opportunity to basically take a long position into the money, okay? And then obviously the same rule applies on the downside as well. But how do we actually determine the breakout? Well, what we're going to be looking for is a candle actually printing outside of the range, just like this one right there, okay? That is essentially a technical break of the range. But something very, very important that I want you to understand, this is not the type of range break that we are going to be looking for. That's not what I'm going to get you to be doing when you go through this model. I'm going to show you a very specific way in which we look for a range break. So for a valid confirmation break, we require a fair value gap sequence actually cause the break of the range. So you can see right here, you got this 3 candle pattern, right? This candle 1, candle 2, and candle 3. That is what we call a fair value gap. And you can see that that sequence is actually breaking outside of the range. You can see that second candle right there is breaking the range, right? So that's what we're really specifically looking for. Now, right before we move on to that, let's just quickly cover off what actually is fair value gap, just so you're very, very clear, right? Fair value gap is a price candle pattern where the market moves so fast that it essentially leaves an imbalance within the candle. So here you've got candle 1, candle 2, and candle 3. And you can see within candle 2, you've got this really lovely yellow box, which indicates an imbalance. That's the gap, all right? So fair value gap candle is candle number 2. And just to differentiate the difference between a sequence and a candle, all right, a fair value gap sequence is when you have the entire sequence of candles, right? So you got candle 1, 2, and 3. So when I refer to a sequence, I'm referring to all 3 candles printing on the chart. The fair value gap candle is just candle number 2. That's the candle on its own. All right. So it's very important to understand that distinction between the two things. So in order to have a valid break of the range, we need that fair value gap sequence to cause the break. All right. So as you can see right here, you can see the sequence candle 1, 2, and 3 is actually causing the break collectively, right? So the dark green candles are the sequence that's actually breaking the range. That's very, very important to understand. Another alternative way that the range can break is that candle 1 is actually causing the break. So in this example here, you can see candle 1 is causing the break of the range. But in the previous example, we can see that candle 2 is breaking the range. Both of those are completely fine. If it's candle 3 breaking the range, right? So if candle 3 was down here, that is not the best entry, okay? The ones that I'm looking for specifically are for candle 2 to break the range like this example here, or for candle 1 to break the range like this one here. I actually prefer this particular break. It gives me better results over time. Now, when it comes to the actual entry models, we've got two specific ways in which we can do this, right? We've got an immediate market entry, which is what you can see on the left. That's model 1. And then you've got the retest, which is model 2. The retest is the one that actually has, for me, given me exceptionally good results. But there's a few different differences between the two. Model 2 doesn't show up as much as model 1. All right. Model 1 doesn't win as much as model 2, but you'll get the setup a lot more frequently. So over time, both of them kind of balance each other out in terms of performance. But I would say that model 2, if you have the patience and the discipline for it, is an exceptional way to actually trade. And I'll be showing you the results of that in a little bit as well. So for model 1 is the immediate market entry. What we're specifically looking for here is when you are coming into your entry like this, all right? So let's say this is the candle formation, right? You got candle 1, candle 2, and candle 3 right there. You can see it's printing right outside the range. The range has been broken here. This is the 15-minute high right there, right? Just that gray line. That's been broken. So as soon as candle 3 essentially begins to form and it's about to close up, we can then get our time to position our stop loss and our target. Now for the stop loss, what you're going to be doing is you're going to be putting the stop loss right to the bottom of candle 2, all right? So your fair value gap sequence, the stop loss just goes to the bottom, right? And you include the wick in the positioning of that stop loss as well. Your entry is just going to be literally a close of candle 3. So as soon as this little guy here closes, our entry would be right there, okay? So candle 3 closes, so our entry is going to be here. To do this, you're going to mark it into the position. You're not going to do a limit order. You're just going to mark it in. So you're going to literally just hit buy as soon as candle 3 closes, and then you enter the position right there, all right? Right where that little line and that dot is, okay? That's where you're going to be. Now, a couple of different things on risk here. You are going to be targeting 2R on the trade. So what does that mean? Well, simply put, let's just say the red box is worth $100, right? So you're risking $100 on the trade. What you're going to be doing is targeting 2R, which means you are going to be targeting $200 for your profit target, all right? Please stick to these parameters. Do not change it, and always have your stop loss at the bottom of the wick just like this. That essentially is your immediate market entry. So just for more clarity, right there, as soon as candle 3 closes, right, you can see just where the little arrow is here, that is where the entry essentially is, all right? So hopefully this image here, this diagram just gives you a little bit more clarity on exactly how that works. Let's move on to the second model. Now, the second model is when the third candle has already formed, right? So you've got candle 1, candle 2, and candle 3 just here, 2 and 3, all right? These are now breaking the 15-minute high range, right? So you can see that. Now, just at the top of this fair value gap, you can see this yellow box. I've added this little line here. That line represents the opening of the fair value gap, all right? So that would be just right there, okay? As soon as that fair value gap starts, just at the top there, that is going to be your point of entry for this model. What you're going to do is you're going to position your entry at the opening of the fair value gap, right? Just there. So just essentially where this line is, right? So the opening section just there, that's going to be your limit order entry, all right? Then your stop loss, same thing. You're just going to put it to the bottom of the fair value gap candle, candle number 2. And once again, you are just targeting 2R for your profit, exactly the same thing, right? So for example, if it's a $100 risk, $200 for your profit target, okay? Then what we're going to do is you're just simply going to set that limit order, right? So your limit order is set here. Price then is going to retrace into the limit order. It's going to tag it, and then it's going to continue on from the fair value gap. So the fair value gap, the way it works is price retraces into the fair value gap. And if the fair value gap can hold the price, it will then continue on its upward trend as it was in the initial opening of the range, all right? So that's pretty much it. Again, very, very simple. Wait for the 3 candle pattern to print, break the range. You're then going to put your entry at the opening of the fair value gap candle, wait for price to retrace, and then it continues on into the trend, all right? So that then will execute when the retrace comes in. The limit order basically executes as soon as the price comes in, right? So as soon as that little candle tags the entry here, that's when the order will fill, and then price then just propels to the upside. So just a couple of rules of operation here, just to make sure you are maximizing your results with this. I only want you to apply one model at a time, either pick model one or model two. Doesn't matter which one, they'd both work. All right. So apply one of them. You're only going to be targeting 2R. As I said, please do not extend your TP to try and do massive swings. All right. It's just about consistency here. We're not trying to get massive wins here. All right. Be logical with your stop loss. So, position it at the bottom of the fair value gap candle. But one thing I want you to know is that if you feel that the stop is too tight, right? If it's very, very tight, then allow yourself a little bit more room. But generally, don't go too heavy with your stop loss. Bottom of the fair value gap candle, including the wick, will be absolutely fine. If you win a trade, you're done for the session, all right? So you don't go and take any more trades after that. And I want you to allow yourself up to a maximum of 2 losses. So if you've lost twice, that's kind of it, right? You're done for the day. And the way that you would trade a loss, right? So let's say, for example, the range on the bottom side breaks, right? So let's say the range on the low of the 15-minute candle ends up breaking, but it doesn't continue to the low. Instead, it ends up going up and it breaks the top of the range. Well, then you can take a second try on the top of the range instead, right? Or the bottom, if it retests the bottom, you can do that as well, all right? But allow yourself 2 losses maximum. So let's actually jump to some real examples on the charts. So you can see right here, we are on the MNQ chart and we can see the 9:30 candle right here on the 15-minute time frame. So this is New York session. This is your 15-minute time frame, and you've got a 9:30 candle here. And what I'm going to do is I'm just going to mark out 15-minute candle, right? Just like this. Now that yellow box essentially gives us the high and the low of the range. What we're then going to do is switch over to the 5-minute time frame. All right. So the execution happens on the 5-minute time frame, and we're then going to wait for the range to break. All right. Just like that. So just the way we've seen in the example I've shown you, right? So your candle's going to get a breakout. And look, we've got candle 1, 2, and 3, just like we said. Here's candle number 2. So that's your fair value gap candle, right? Let's mark that out right there. Now, what we're going to do is we're going to do the retest model here, and I'm going to wait for price to actually retrace to the top of that gap, right? So if you've paid attention, entry would be just at the top there, all right? We're going to wait for a retrace just to there, and the stop loss goes to the bottom of the wick just like this, all right? So if I now make this lighter, it's easier to see, all right? You can see that the stop loss just comes to the bottom of the wick here, and when we're now targeting, what we're going to do is we're just going to target 2R like that, right? Now, the anticipation is that price actually just retraces into this fair value gap, and that can then push off, right? So let's just label that FVG, just so you know, that's the fair value gap. And now price will now come back in just like that. So you can see that little tap into the candle, right? And then we're just looking for a push up for price to continue. So there we go, price coming up, and let's just play it out. And it's okay if price bounces around, that's fine. We're just going to stick to our conviction here. And there we go. All right. Price comes into target just like that. So it's a very easy entry model. Hopefully that's very, very super clear on how that works. Also, guys, for anybody that wants to become profitable faster and get the success that they're looking for in trading, check out my trading course, The 90-Minute Trader, where you get access to my full trading strategies, including different models that you don't see me talking about on YouTube, models that are being used by hundreds and hundreds of students in my Discord community right now. People are using these models every day to post wins, to get payouts, and to pass evaluations every single day. And if you want to know if this is legit, check out these reviews from the customers that have actually been using the 90-Minute Trader. We've got hundreds and hundreds of positive reviews, positive feedback from people that have been using our course, using our model to get life-changing results from the education that we provide. You also get access to our Discord community where you can network with all these profitable traders, including me. You get to see my market analysis, and you get to see my own P&L, my trade activity every single day. So if you're ready to get profitable and you want to start crushing it in the market, go ahead, check out the 90-Minute Trader. I've left a link in the description below if you would like to go and check that out. Let's go through another example together real quick. So once again, we're on the 15-minute time frame. You can see 9:30 market open. So we're in the New York session. And once again, we're just going to switch over to the 5-minute time frame to see if we can get a breakout. So let's see what happens here. Okay, price now obviously has broken out of the range, but we can see that there is no fair value gap sequence yet. So we can't enter this trade just yet. All right, great. So now we actually have had a breakout with a fair value gap. So you can see right here, we've got candle 1, 2, and 3. Once again, let's go ahead and draw out the fair value gap there. So once again, let's use that same model. We're going to use the retest model here. It means that our entry will be just at the top of the fair value gap, just like that. We will place a stop loss at the bottom of fair value gap number 2, so candle number 2 rather, and we're just going to be targeting a 2R on the trade once again. So we are anticipating for price to just simply retrace into the gap and then allow us to ride the momentum to the upside. So let's take a look and see how this one plays out. All right, so we can see that price does come pretty close close to our stop loss, doesn't hit it just yet. So we're still safe. So price has come into the fair value gap, and the fair value gap seems to have held. So very, very wiki price action here, but we're still in the trade. Once again, price comes down pretty low to the stop loss, still holding. All right, excellent. There we go. And that is TP on example number 2. Now you're probably wondering, does this actually really work? Now, a lot of the time people will leave comments and say, oh, have you really got results? Have you actually really done this? Is this genuinely actually profitable? But what I want to do right now is I want to show you my actual genuine back-tested results on this strategy. So if you have a look at the screen right now, you can see these are the analytics that we have on this particular model that I'm talking to you about right now. So you can see if I drop down my session, you will see 15-minute opening range retest. That is the actual strategy that I'm trading at the moment. And let's just take a look, right? So we had a total P&L on this of $23,000. So that's a 47% growth, 60.34% win rate with a total number of trades, 58 trades. And that is over a 3-month period, right? So we took it from September all the way into the end of November. All right. So quite a good period of time to test this model out and test this data out. Something also very interesting here is that you'll find that the opening range is when we're actually making most of the money, is when that opening session is actually happening around 10, 11 o'clock is when most of the money is being made. So you can probably even refine this further if you simply just cut off your trading from around about 12 o'clock, 1 o'clock time. You'd actually probably end up getting even better results. But, this is just based on the model throughout the entire day. So that's it. That's pretty much the model. These are our genuine results on these actual sessions. And just to prove this even further, right, because I know people are still going to be skeptical, I'll go into the sessions and I'm going to actually show you, right? So I'll go into that 15-minute session. I'll go to the chart and I'm going to show you every single test that I took. I took all of these tests manually. All right. This is nothing automatic about this. Every single trade here, you can see, look at this, every single one. I had tested every single one. All right. Each one over a 3-month period. It took me a decent amount of time to go through this. All right. I spent a weekend doing this and I went through every single one. Right. So I just want to show you this because, a lot of the time people will come into these comments and they'll say things like, oh, this is too easy or it's too basic. But the problem is like, if you don't try, you're never going to know. And I know from our community, the amount of incredible results people are getting from using our models every single day. That's just me scrolling through every single one. When you see these blue lines, that's been drawing out the 15-minute range, right? And you can see these little entries and the exits and everything else. And oops, sorry, and they're all there. Okay. So I just wanted to kind of make it clear that this is genuinely something that I actually did, something that I went and back tested myself. And I use this strategy every single day myself. All right. You can see here the last test was all the way on 30th of November. All right. So if that doesn't give you enough confidence, then I don't know what will. All right. I'm making money with this. My students are making money with this. This is a genuine actual model that is working in real time right now. So don't waste any time. Just go and try the model for yourself. And guys, look, if you need additional help from me and you want to work with me directly, please go ahead and check out the 90-minute trader. It's in the description below. We can talk and you can also network with all the other traders in that community who are actually crushing it right now, getting payouts and growing their accounts. You'll also get access to other models that I don't talk about on YouTube as well. So if you're ready to take it to the next level, check out the 90-minute trader. I hope you've enjoyed this video. Hit like, subscribe, and I'll see you in the next video.